Broadcasting live from Houston, from the space city to the world. You are watching Now Media Television.
Thank you, Glenn. Well, we're back with Tammy Mijail in these Tammy's Tax Tips. And today is a very important segment, you guys, because we're going to talk about
last minute tax tips.
You see, the year is ending. It's important to know what you need to do before the year is over so you can have these absolutely wonderful tax planning tips. So tell us about it.
Well, one thing that you can do if you haven't already given charitable contributions. Now, if you don't itemize, you can still give $300 if you're single, $600 if you're married, and you still take that above the line tax deduction. So if you don't itemize, you still get to take that. So it has to be $300 or $600 cash to a 501c3 charity.
Okay, now for everybody that speaks English just plain, just like myself, what is a charitable contribution?
Will you write a check to a church or some nonprofit?
It has to be a nonprofit, right?
A nonprofit that's registered with the IRS, so 501c3. You can even look on the IRS website and look at the list of charities.
Okay.
And make sure you're giving one to a registered 501c3.
And you can give them $300 or $600. $300 if you're single, $600 if you're married. Filing jointly?
Very jointly.
Okay, so if you're married filing separately, that doesn't apply.
Well, $300 you're stuck with.
Okay, so you're stuck with $300. So you can make that and automatically if you don't itemize. Now, what is itemizing?
Itemizing is when you can take the Schedule A deductions when you have more than the standard deduction. So you do your property taxes, your mortgage taxes, charitable deductions, gambling losses go on there, and there's some other things that can
Gambling losses.
Yes.
Are those? I don't gamble, but are those deductible? That's you.
Yes. Well, you can take gambling losses up to your gambling winnings. So if you're a gambler, you have to pick up your gambling winnings as other income, and then you can take your losses up to your gambling losses.
All right, perfect. So this is very important. So we're talking about one of the things that you can do is charitable contribution. What else?
You could bunch your property taxes. So if you haven't paid your property taxes already this year, you could pay them before the end of the year, and hopefully that'll bump you up enough above the standard deduction so you can itemize. So a lot of times people will pay their property taxes in January and in December, so they're bunching them in the same year.
Okay.
We can do that here in this state of Texas.
That's good.
Not every state gets that opportunity.
Okay.
So that's bunching of property taxes. You can also bunch medical expenses.
Okay.
If you have the opportunity to pay extra medical expenses, if you've had additional medical expenses this year and you're kind of on that cusp where you can start itemizing for your medical expenses, you might consider paying your medical expenses in advance. Like if you know you've got a surgery that you're going to do in January, that you could go ahead and pay that bill now instead of waiting until January.
Okay, all right. And so we have charitable contributions, then bunching property taxes, for example. That means you're paying your property taxes on the same year. So now, what are the things people can do for last minute tax planning?
Another thing to think about is converting your traditional IRAs to Roth IRAs.
Okay, and what is that?
Well, if you have a traditional IRA, right now, if you leave it as a traditional IRA, when you take the money out, you're going to have to pay tax. So if you're thinking about in your future years, when you're in a retirement age, that your tax bracket is going to be lower, you might consider leaving it that way. But if you're going to be in a higher tax bracket, you might consider converting it to a Roth IRA, so that you're not paying the higher taxes. So you pay the tax now when you convert it to a Roth IRA, and that way it grows tax-free. Okay,
and do you have another one?
Just a reminder that if you need to take money out of your doing your regular RMDs, your required minimum distributions, to go ahead and get those done before the end of the year.
So this has to happen before the end of the year. That means December the 31st at 11:59 p.m.
I wouldn't wait that long.
Well, right, of course, but you get them done before the end of the year. So one of the main things and the purpose of this segment, folks, is tax planning is a must. In this country, you probably want to make sure that you have a competent CPA, a tax planning professional, an expert on all things taxes. And that's why we have Tammy here, because these tips can apply to you and you can start using them immediately. However, like we discussed before, having a personalized, a custom tax planning strategy requires a consultation with you. Now, where people can get in touch with you?
Well, we have our website, which is www.mahalescpa.com.
You can see it on the screen, okay?
Okay, and then you can contact me on my email, which is tammy@mahalescpa.com.
Mm-hmm.
And then our office number is 281-406-8984.
So there you go, folks. One of the main things that you want to do is minimize, and we've talked about that on your last segment, is that it is okay and it's a must, especially for a business owner, for a sole proprietor, for self-employed, to minimize in an intelligent and smart way your tax liabilities. And that's why having somebody like Tammy, it's important to be able to achieve that in the good way, the way you probably have to do it. So
The legal way.
Well, of course, the legal way, but it's not only the legal way. You were talking about in your last segment talking about deductions, that you might not want to deduct your assets when you're trying to apply for a loan.
Oh, that's true.
So that's what I'm saying. It's not a matter of being legal or illegal. It's a matter of being smart,
Right.
and that's why important tips we have from Tammy Tax Tips, and that's why she is with us every week on Networking Now. And with that, Tammy, well, thank you very much for being on the show today. And we're going back to Glenn.